Wall Street has sold you a mathematical illusion. They told you to diversify into an S&P 500 ising years, wait, pray that doesn't devour your purchasing power before you reach the finish line. That is not wealth creation. That is poverty management. Index funds are a parking lot for capital, designed for wealth preservation. But if you want to actually build an empire, diversification guarantees mediocrity. The elite do not diversify to get rich. They concentrate to build, and they diversify to protect. Welcome to the Wealth Mindset Blueprint. Today, we are tearing down the myth of the index fund and replacing it with the exact capital allocation strategy you need to scale net worth at high velocity.
Let us dissect the actual mathematics of the diversification trap that you have been conditioned to accept. When you deploy capital into a broad market index fund, you are purchasing a fractional share of the winners, but you are also permanently anchoring yourself to the losers. You are intentionally watering down your yield to protect against volatility. The financial media in the US, the UK, and Australia will tell you that a 7 to 10% average annual return is the gold standard of investing. But what they conveniently omit from the brochure is the silent, compounding destruction of real inflation and currency debasement. If your capital is growing at 8%, but the true cost of living, housing, and energy is compounding at 7%, your real wealth is effectively paralyzed. You are running on a treadmill that is accelerating just as fast as you are sprinting. When you spread your capital across 500 different companies, you are making a public admission that you have no informational edge. You are accepting a purely defensive posture in a game that heavily rewards offensive execution. If you have studied the foundational systems in our previous 15 blueprint videos, you already know the core tenet of this channel. We do not play defense. We play offense. We are architects. Spreading $10,000 or 10,000 pounds across a massive, slow-moving index does not create a wealth cascade. It creates a stagnant trickle. It prevents you from ever experiencing the explosive, high asymmetry growth required to escape the middle class. Diversification is a shield, but you cannot conquer new territory using only a shield. You need a weapon. You need a focused, highly concentrated vehicle that forces capital to multiply rather than just survive. Wall Street pushes index funds because it is easy, scalable advice that keeps retail investors complacent while the institutions charge management fees on trillions of dollars of stagnant money. It is time to break the programming. The second foundational flaw of the index fund obsession is the timeline. The traditional financial industry sells you the deferred life plan. They ask you to sacrifice your most energetic, aggressive, and capable decades, your 20s, 30s, and 40s, so that you might have a reasonably comfortable existence when you are 70 years old. This is an architectural failure of the highest order. Wealth is not just a measurement of accumulated capital. It is a measurement of time and optionality. Capital possesses a time value, and waiting 4 decades to deploy the fruits of your labor is a profound misallocation of your life's energy. The traditional roadmap relies entirely on the magic of compound interest over a massive time horizon, but compound interest is a lagging indicator. It only becomes truly powerful in the final 10% of the timeline. If you are starting from zero, compounding a $5,000 annual investment at 8% will keep you trapped in the rat race for decades. You do not have a compounding problem. You have a capital velocity problem. You have an income and multiplier problem. To break free from the slow motion trap, you must engineer a system that compresses time. You must reject the idea that wealth takes 40 years to build. The elite accelerate their timelines by shifting from passive accumulation to active capital engineering. They focus on generating massive cash flow today, rather than waiting for fractional dividend payouts in the year 2060. They understand that money is an abundant resource, but time is strictly finite. By anchoring your entire financial identity to a passive index fund, you are effectively handing over control of your timeline to macroeconomic forces, central banks, and market cycles over which you have absolutely zero influence. The wealth mindset blueprint demands autonomy. It demands that you take the wheel, force the yield, and compress a 40-year waiting period into a 5 to 10-year execution phase through aggressive, targeted action. If diversification is the weapon of the uninformed, then strategic concentration is the weapon of the elite. This is the ultimate pivot in your financial architecture. Wealth is created by making a small number of highly asymmetric, deeply researched bets where you possess an unfair advantage. You do not need to own a microscopic piece of 500 companies. You need to own the infrastructure of one, high-performing cash flow engine. Andrew Carnegie famously said, "Put all your eggs in one basket and then watch that basket." This is the essence of capital engineering. When you concentrate your capital, your focus, and your energy into a single vehicle, you regain control over the outcome. You are no longer subject to the arbitrary swings of the broader market. Instead of allocating 10% of your income into a passive fund, imagine deploying 100% of your investable capital into acquiring a profitable digital asset, scaling a high-leverage skill, or building an automated business pipeline. This is where you achieve exponential returns. 100% return on a concentrated bet completely changes your socioeconomic trajectory, whereas a 7% return on a diversified portfolio barely covers your annual grocery inflation. Strategic concentration requires intense conviction. It requires you to do the analytical heavy lifting that the average retail investor simply refuses to do. You must become a master of a specific domain, whether that is commercial real estate in your local market, software as a service acquisitions, or high-ticket sales infrastructure. By narrowing your focus, you eliminate the noise. You become an absolute sniper with your capital allocation. You wait patiently for the perfect setup, the perfect asymmetry, and when you see the opening, you deploy heavy, concentrated capital to capture the maximum upside. This is how empires are built from scratch. They are not built by spreading resources thin. They are built by striking with overwhelming force at a single point of leverage. This brings us to the operational core of our wealth architecture, the Tier 2 multiplier. If you are abandoning the slow crawl of the index fund, you must replace it with an active cash flow engine. The multiplier is a concentrated vehicle engineered specifically to generate high-velocity capital. This is not a passive investment. It is a machine that you build, buy, or control. For the ambitious operator, the Tier 2 multiplier could take many forms. It could be a specialized consulting firm targeting high-net-worth clients in the US or Australia. It could be an e-commerce infrastructure with fully automated logistics. It could be a portfolio of cash-flowing digital real estate or media assets. The specific vehicle matters less than the underlying mechanics. The goal of the multiplier is to take baseline capital and force it to yield returns of 50, 100, or even 500% annually. You cannot do this in the public stock market without taking on catastrophic levels of unhedged risk, but you can easily achieve these returns in the private sector when you are the one controlling the operational levers. To engineer this multiplier, you must stop viewing yourself as an investor and start viewing yourself as a capital allocator. Investors passively wait for returns. Allocators actively inject capital into systems to increase efficiency and output. You build the efficiency floor first, automating your basic living expenses, so that you can violently direct all remaining excess capital into the multiplier. You feed the engine. You reinvest the profits back into the engine to increase its capacity, scale its marketing, and dominate its specific micro-niche. This is the phase of hypergrowth. During this phase, you are completely undiversified, and that is exactly where you want to be. You are maximally exposed to the massive upside of your own competence and execution. Now, does this architectural philosophy mean you absolutely never buy an index fund, or that you never diversify? No. It means you must sequence your actions correctly. You do not use passive diversification to make your money. You use passive diversification to store your money once your concentrated engine is already printing massive excess capital. This is the final stage of the system, the Tier 3 Wealth Vault. Once your Tier 2 multiplier is throwing off hundreds of thousands or millions in free cash flow, you face a new problem: capital preservation. You cannot endlessly reinvest every single dollar back into the business without seeing diminishing returns. This is the exact moment you trigger the sweep mechanism. You sweep the excess profits out of the high-risk, high-velocity engine and lock them inside the vault. This is where the defensive strategy finally comes into play. Inside the vault, you buy the broad market index funds. You buy the commercial real estate. You acquire gold, hard assets, and treasury bonds. At this stage, you are no longer trying to force the capital to grow aggressively. You have already won the game of accumulation. Your only objective now is to build an impenetrable fortress around your net worth so that no market crash, no lawsuit, and no economic depression can destroy it. The fundamental error of the middle class is that they try to use the vault strategy to build their wealth. They are trying to build an empire using defensive tools. Stop using the vault to construct your foundation. Use the multiplier to build the empire, and use the vault solely to protect it for generational legacy. You now have the framework to completely rewire your financial reality. You understand that the traditional advice of extreme diversification and 40-year waiting periods is designed to keep you trapped as a passive consumer in the system. You have been given the architectural blueprint to transition from a middle-class tracker of pennies into an elite-level capital engineer. You know that you must concentrate your focus, build a high-velocity multiplier, take deeply asymmetric risks based on competence, and only diversify when it is time to vault the excess capital. The difference between the 1% and everyone else is not intelligence, it is execution. Knowing this framework is useless if you do not build the infrastructure. You must ruthlessly audit your current capital allocation. Stop watering down your ambition. Consolidate your resources. Identify your unique operational advantage and strike with overwhelming force. We are dropping these advanced, high-level financial masterclasses every single day at 8:00 p.m. sharp. We are engineering a community of operators who refuse to play the slow game. If you are ready to stop playing defense with your money and start architecting a permanent financial empire, hit the subscribe button, turn on the bell notification, and join the architecture. Build the system or remain a permanent victim of someone else. The choice is yours. Execute. You now have the framework to completely rewire your financial reality. You understand that the traditional advice of extreme diversification and 40-year waiting periods is designed to keep you trapped as a passive consumer in the system. You have been given the architectural blueprint to transition from a middle-class tracker of pennies into an elite-level capital engineer. You know that you must concentrate your focus, build a high-velocity multiplier, take deeply asymmetric risks based on competence, and only diversify when it is time to vault the excess capital. The difference between the 1% and everyone else is not intelligence, it is execution. Knowing this framework is useless if you do not build the infrastructure. You must ruthlessly audit your current capital allocation. Stop watering down your ambition. Consolidate your resources. Identify your unique operational advantage and strike with overwhelming force. We are dropping these advanced, high-level financial masterclasses every single day at 8:00 p.m. sharp. We are engineering a community of operators who refuse to play the slow game. If you are ready to stop playing defense with your money and start architecting a permanent financial empire, hit the subscribe button, turn on the bell notification, and join the architecture. Build the system or remain a permanent victim of someone else. The choice is yours. Execute.